Auzubillahiminash-shaytanir-rajim. Bismillahir-rahmanir-rahim. Newspaper. Lending for homes. Ready. Start. Affordability is the key factor keeping the low middle income households from owning a house. Full stop. In order to address this gap, the government last year launched a subsidized housing finance scheme under which banks have been directed by the state bank to lend up to rupees 10 million to first time home owners. Full stop. The banks have also been asked to increase their lending for the housing and construction sectors to at least 5% of their total private sector advances by December 2021. Full stop. Next paragraph. A part of their monthly housing finance disbursements, however, must include small ticket loans for aspiring homeowners with monthly income as low as rupees 25,000 for the construction or purchase of low cost homes under the Mera Pakistan Mera Ghar initiative. Full stop. In order to ensure the success of the scheme, the central bank assigns the banks every month rolling housing finance targets according to the size of their private sector credit portfolios. Full stop. The failure to meet these targets attracts punitive action from the state bank. Full stop. Yet, lending for low cost housing is painfully slow. Full stop. The latest data shows that banks combined disbursements for low cost housing remain as low as rupees 18 billion. Full stop. Next paragraph. There are valid reasons for the slow pace of approval and disbursement of bank loans. Full stop. First, the appetite for housing finance is drying up, with disposable incomes being squeezed as low middle income households grapple with the rising cost of living, land and construction. Full stop. Second, the supply of low cost housing units in the market is almost non-existent. Full stop. But a more important factor relates to the bank's aversion to risky lending. Full stop. It is not without reasons that the mortgage finance market in Pakistan is only 3% of GDP. Full stop. Next paragraph. This compares with an average of 3.4% for the rest of South Asia. Full stop. In developed economies, this ratio is often as high as 95%. Full stop. Pakistani banks shy away from lending for housing primarily because of the absence of effective foreclosure laws that would allow lenders to response a property without any judicial interference in case a borrower defaults on his payment. Full stop. Given the infection ratio of up to 18% or more for individual banks, this hesitance is justified, particularly when pressure from the state bank to meet their monthly targets for small ticket loans could impair the government quality of their housing credit portfolio. Full stop. Therefore, the government should introduce effective foreclosure laws at the earliest if it wants the mortgage industry to expand and flourish, to provide people access to finance for buying or building homes. Full stop.